Hello traders, what's going on guys? Hope you guys are doing great. I hope you guys are doing amazing. Okay. Yeah, this is your host, your guy, Henry the Great, and I welcome you guys to this section. Okay. We're going to take a look at COT reports as swing traders, as retail traders. If you really want to take your game to the next level, you have to be looking at where institutions are looking at to get their information. Okay. So we're going to look at COT reports, how to analyze it, and then how to actually use it to look at the bigger picture of what the institutions are actually trying to do based on the assets you're trading. And then we look at DSY, we look at Euro futures, and then we look at Canadian dollars, and then look at what smart money, what they are doing based on the general overview of the market. Okay, so at the end of this video, you'll be able to have a solid understanding of the COT report, what it does, and how to be able to use it to improve your trading. And then I'm also going to talk about my own strategy, how I combine a COT report with my strategy to actually position myself for larger move in the market. Okay, so let's go straight to it. Now, to access COT report, you go to tradingstar.com. Go to tradingstar.com. This is the link. I'm actually going to drop the link below this video. Go to tradingstar.com. Okay, so if you go to tradingstar.com, you'll be able to access COT report. Okay, now COT report stands for commitment of traders, commitment of traders. Okay, that is the full meaning. COT means commitment of what? Traders. Okay, so now this report is released every Friday of every week, and it covers to Tuesday of that week. Okay, so at the end of Tuesday business transactions, the report is being prepared, and then on Friday during New York section, the report is being released. Okay, and it captures all the non-commercials, which is the smart money, the hedge fund portfolio managers, and the commercials, which is called the central banks. Those ones are hedgers, and then they call it non-reputables. The non-reputables are the retail trader, just like you and I, right? Yeah, so that is what it captures. It captures their long positions and their short positions on every asset on futures market. The future market is the replica of the contrast for difference, which is the forex market. Okay, so you have the Euro futures, of course, you have the Euro USD futures, you have the GDP Japanese yen, USD Japanese yen futures, and then you also have the forex market. You have the USD Japanese yen, which is the currency pair. It's the same thing. You have the futures market and you have the forex market. They are the same thing. They move the same, just that the future market moves faster sometimes more than the forex market. So if you have the Euro USD futures, you also have the Euro USD pair and the forex market. So it captures their long and short positions, and then these are the people that move the market. Okay, so you should be able to get interested because these are the people that move the market, and if you can be able to see how they are reducing their positions or they're increasing their positions on the assets, you can know how to position yourself to take advantage of that. So let's look at what's happening currently in the market with all sincerity. So to access the report, go to tradingstar.com, and then you go to tradingstar.com. Then you can see different. You have the energies, you have the metals, you have the indices, you have the cryptocurrencies, you have the currencies, and all of that. So we're going to look at the indices. You look at Euro futures, you look at Nasdaq, and then the currency, you look at Euro futures. Okay, just Euro FS. That's all. With DSY and S&P 500, you've already gotten the general overview of other assets, because of course these are the major asset classes that affect other currencies in the market. Okay, so let's look at let's start off with let's look at DSY. Okay, currencies we have I'm looking for US dollar index. Okay, I've seen it. So you click on COT legacy, that's the one you click on. So click on that. I hope you're taking record of everything I'm saying. I don't have the time to start putting all those annotations and that. Just listen to me, you'll be able to understand and hear what I'm actually saying. Okay, today I'm making this video. Today is actually today is Tuesday, 17th of June 2025. Okay, so this report I'm reading today is a report of Friday 6th It's a report of Friday 6th. And then I'm also going to look at 13th as well. Friday 6th and then 3rd. We look at 6th and 13th. Okay, so this report covers 10th. Okay, 10th. Where is 10th? That is Tuesday, of course, like I said. So we look at 3rd of June and 10th of June. So the month of June, what are the smart money? What were they doing on DSY? What were they doing? Are they increasing their long positions? Are they decreasing their short position? What were they doing? So let's start from the Tuesday, which is the first week in the month of June. So if you come here, you toggle here, just click on Tuesday. You click on Tuesday, 3rd of June. Let's start from there, okay? Let's look at what happens. So non-commercials are the smart money, the hedge fund, the portfolio managers, and those with large fund that can be able to move, the JP Morgans, those are people that can be able to move the market, okay? And the commercials are the central banks, the country's central banks, different countries and the central banks, people that actually move the markets. So those ones are hedgers. They don't even care the direction of the market. They hedge. If they want to hedge, they can hedge position for like 2 or 3 years. Yes, they are position traders, so they hedge. So you don't even need to look at them. You focus on non-commercials. These are portfolio managers, the smart money. You focus on them. Then the non-reputables are the retail trader, just like you and I, like I said before. So we look at the total of everything. So on DSY, on third, which is the first week in the month of June, what were they doing on DSY? Now, their long position was 15,748. Good. Hope you guys can see my screen. I just hope you guys can see. So if you watch this video, if you need more clarification, if you have questions, please ask questions. That's how you learn, okay? I'm going to remove everything. We're looking at COT report and look at how this guys position themselves for a very long move. If you don't have access to other flow, you don't have access to you don't have access to institutions, data, you don't have access to software and rest of them, you can actually use these things to improve your trading, okay? So this is DSY, right? This is actually DSY. I'm going to remove everything. Just want to have a clean chart. So if you want to look at what they are doing, you have to start from the monthly and the weekly. Okay. So let's look at what is happening on the weekly time frame. Okay, this is DSY. Now, the month of June, this is the month of June. Now, has price traded into a higher time frame key level in the month of June? That is what you'll be asking yourself. Okay. Now, how do you identify key levels? Rejection week, order block, fair value gap. And if you look very well here, there was a sharp push to the upside from here. There was a sharp push to the upside. Now, the same thing here as well. But then you can see that this one has also been mitigated in the past. You can see that was in the month of April. That was when price came here. Okay. And then if you come down here, you can see there was an energy candle here again. Can see this displacement to the upside that even broke this high. So this is actually an order block right here. Okay, with that gap, you can see there was a gap between that. There was a gap between this candle and this candle. There is a gap. That's a fair value. That is what we call key levels. Okay, so we map them out. Okay, so eventually price is actually going to use this guy as liquidity. Price is going to use this one, this first one is going to use it as liquidity. Okay, so I might actually, since it has mitigated, I must actually remove it. And then what I'm going to do is that I'm going to use this guy. I hope you guys are getting value from this video. This type of video doesn't get attention. They don't get attention. They don't get likes. They don't get views, but they are very powerful. I know. They are very powerful. They don't get views, so they don't get likes, but they are very powerful. I just hope you learn something, you that is coming across this video, okay? So price is going to use this guy as liquidity and then tap into this key level. Now, this is the month of June. So what are they doing? Do they want to see continue pushing price to other key levels that we can see here? These are other block also. So this month of June, what are they doing? What are they doing on DSY? What are they doing? Now we have we have NFP, and you know that Tuesday, NFP has not actually been captured in the data. So you definitely need to wait for that first week of the month, right? So if you want to take any reversal trade, I would suggest you wait after the first week of that month. Know what non-commercials are doing, right? So you can actually take trade in the direction of that market. Now, except probably before the month end, they were actually increasing their long position. Of course, you can as well verify that. I don't really know. Let me look at that as well. Let's look at what's happened in the month of May, the last COT report of the month of May. Let's look at it together. Let's look at what happened before NFP. Let's look at what happened before NFP. Their long position was 18,406 and their short position was 18,492. You see, their short position was higher than their long position before NFP. So it tells you that they are not yet ready to start moving price to the other direction. They are still very much bearish on DSY before NFP. So there is no need for you to start looking out for reversal, right? Exactly. Good. So now what you're going to do is you have now identified what is happening here on DSY. With DSY, you can even capture other ones like other assets, other currency pairs, and if you know the direction of DSY, you can predict other ones, because when DSY is bullish, other ones could be bearish. You have opposite correlated pairs and rest. I'm going to talk about pair correlation probably in the next video, right? This video is all about COT report and how you can use it to position yourself for a larger move, right? So the last week in the month of May, they were actually increasing their short position. So there is no need to start looking out for reversal. So if there is any opportunity for you to sell, please sell with them. But after the first week of June, right, now COT report was released, and then that time price have now traded into this key level, and they can see that this is an inducement liquidity as well. So you now look at what is going on, what is happening. Do they want to start keep pushing price to these key levels? How do you know that? By looking at their positions. Are they increasing their short position from that 18,400, 486 to probably 1900? That tells you that they still want to start pushing price to these key levels. So now, after NFP, now they release COT reports that covers third, right? So I think this one is even before NFP, right? So now before NFP, we started seeing their short position was decreasing and their long position was what? Increasing. Okay. Now on the daily time frame, you can see there is no much thing here. This is the first week in the month of June. Now this was kind of supposed to be, you start looking out for reversal candlesticks. This was supposed to be a morning star, but you can see this morning star failed. It didn't actually fully engulf. So this morning star did what? Failed, right? So now I know that this report did not cover NFP. This 3rd of June did not cover NFP. The one that will cover NFP is the second week of the month. Since they were still bearish previous month, there is no need for you to start looking out for reversal, right? And this 3rd report did not even cover NFP and CPI. So the one that will cover NFP and CPI is the one we have to look at for today. Now you can see this is total. Total is what? 25,884 and short is 24. So they were increasing their long position and they were reducing their short position before the release of the NFP report and CPI report. Now after we release CPI report and NFP report, which is now, like I was saying, that today I'm making this video is the 17th of June 2025. So now we can see the report of 10th, which covers NFP of Friday, which is 6th, and our cover CPI is the one of this week, which they will release on Friday. But now, so far, we have reports of 3rd, we have reports of 10th. So these two reports, one of them covered NFP, which is actually the one of 10th. So let's look at the one of this week, which is the one of 10th, and see what is happening. Good. So now, non-commercials, short long position on DSY, 17,025. So they have increased it from 15 to 17. And then their short position is 15,625. So we'll have more long position and then less of what? Short position. And then price have traded into a key level. Is it really making sense to you right now? Good. So they are increasing their long position and they are reducing their what? Short position after the release of NFP data and other data that follows it, which was actually PMI and rest of them. Okay, and then also we have reports of each of these reports. We have reports of um unemployment change as well, right? Good. So total position including long commercials and commercial 28,314 and then short is 26. So the difference is very, very clear. So this is what they are doing as price have traded into a key level and as NFP data has been released. So how do you use this information to be able to position yourself for a very long, for a reversal change, or for, how do I put this thing now, for optimal and high probability trading opportunity? You start to look out for your strategy. What kind of strategy do you trade? Now, I trade harmonics, and harmonic we trade is a combination of what? Smart money concept. So we combine harmonics, which is a measured move. We look at some structures that are repeatable and that are measurable, that aligns with weekly key levels, and then with the combination of smart money concept of liquidity, order block, break of structure, and change of character, we can be able to enter at a very good level for a very good high precision and high reward, high risk to reward trade. So now what we look at for is price trading into a higher time frame key level, probably a weekly key level. And then we now have COT reports suggesting that the non-commercials, which are smart money, as price have approached this key level, they are increasing. For instance, you're looking at for sell. Let's start from sell. So price have traded into this weekly key level right here. And then we now look at COT report of that asset. We now see that the smart money and the portfolio managers and the hedge fund traders, they are increasing, they are decreasing their long position on this trade and then increasing their short position as price have gotten into this key level and as NAP data has been released, or even before NAP data have released, provided that price at 33 key level. Look at COT reports, we see that they actually shorting this guy at this key level. So now what we do is that we look at to see if we have a valid harmonic pattern, probably a crab, a bat, a butterfly, a shark, a cipher, or SABCD or ABCD pattern that is in alignment with this key level. So sometimes we can see an harmonic pattern of this form. We might see a crab of this form. Remember, there are other small reversal. There are also small structures that happen here. Of course, these are just wave. Okay, there are other higher low that happen there. But looking at the overview, the general overview of the whole thing. Okay, so now when we have a harmonic pattern into this higher time frame key level, okay. Now what we now do is we measure this pattern to know if it's actually valid. Now, if the pattern is not valid, then there is no trading opportunity. Sometimes we always get that precise, and we're going to look at some of them in a minute. We're going to look at some of them in a minute, okay? We always get that precisement of pattern. We always get it. It always sometimes aligns with the weekly key level. So what we're looking at for here is what we call a crab pattern. Okay, I'm going to explain that. Even though you don't know what I'm going to explain that for you guys. Okay, so why is it a crab pattern? The reason why it's a crab pattern is because of the structure and because of the measurements. Now, for the structure, it has this kind of elongated point here, extended move here, and you can see how this one looks like a kind of a triangle, but an extended triangle of the other side, and then you can see how it looks like. So the structure tells us that this could look like a crab. Then we need to take the Fibonacci measurement to know if this point is between 0.382 and 0.618, and if this point that aligns with the weekly key level is at 1.618. When we get this kind of stuff, we can now ascertain that we now have a valid crab pattern that is in alignment with the weekly key level. Is it really making sense? And you can be able to see this kind of patterns even on the lower time frame. Probably you're a scalper on the 1 minute time frame, you can see this type of M and W formations, and then they are measured move, right? Good. So now we now use our XABCD tool to actually enclose that that particular price point so that we can be able to have an area of focus. You can as well use the measurement of the SAB tool, but I always use my Fibonacci retracement tool to be able to measure it. And if you're wondering where you can be able to learn this type of strategy step by step, we have an academy where we teach our students how to trade the market and make massive profits from it. So now what we look at for here is when price gets here, we want to see structure shift. We want to see price shifting from bullish to bearish. We need to see that first structure shift, and we look at that supply that caused that structure shift with an inducement liquidity, okay, and then we do what? We sell from there. So we need to see that structure shift, price returning back to origin with inducement liquidity, smart money, then we sell from there, and then with tight stop loss, we target. That's why we start to see return of 1:16, 1:17, 1:18, 1:9, 1:10, 1:5, 1:20. They are very, very massive and they are very crazy. Okay, so that is general overview of what you're looking at for. So you've already gotten your confirmation from the COT report that these guys, they are actually looking at to short this market. So you have already positioned yourself waiting for structure shift either on the 1 hour time frame or on the 4 hour time frame. So these are the things we teach in our community. So now you can see how you have been able to use COT report to be able to have a confidence and a conviction and a confidence to be able to do what? Pull the trigger to take that trade. So on what's happening right now on DSY, you can see, so if you have any kind of harmonic pattern that is in alignment with this key level, probably on the DSY, if you have any kind of harmonic pattern that is in alignment with DSY, probably you can see that you have a kind of a pattern that is in form of something like this. And if you measure this and this is valid for probably for a crab, for a shark or whatsoever, you can see how I use my eye now to identify this formation right out of the bat. I didn't even, because I'm used to it. And that is what you get used to when you join the academy and learn how to do it. Just as simple as that. It doesn't even take me time. And someone can as well come and say, okay, fine, we might have this type of pattern as well, depending, might have probably a crab. Just the crab I told you guys before. I've actually showed you guys, might have a crab, and then you can see here, you can take the measurement to know if it is valid. I don't know, I'm not sure if it's valid, but if you take the measurement and it's valid, then you can look at for entry. Then you can see this one is not actually valid. But if you look at this swing point, let me increase that for you guys. If you look at this swing point, this is a swing point. It's a very good swing point. You can also look at it, but this is a good swing point. So if you increase that and look at something like this, and you can see, but I'm not sure this 0.382, voila, you can see just like that, you can see that we have 1 point. I actually did this, but it's in the reverse of this. Is a bearish of it because this one is a bullish of it, just like that. I said for a crab, we want to see this point to be between 0.382 and 0.618, and the D point to be at what? 1.618. Then there's another measurement which is of course from here to here, but I don't really take that measurement because of course if I can be able to combine smart money, I don't necessarily need this particular measurement. But this one is the one of 3.618. We need to start to look out for that 3.618. You can see this is 3.618 and this is 1.618. So it is within that reversal zone. It is a zone. That's what we call it, PRZ, potential reversal zone. It is not just a level, it is a zone. Okay, so you've already seen what smart money is doing as prices have come to this key level because of what? They are increasing their long position and decreasing their short position. And then price is already reacting from here. And then on the lower time frame, probably on the 1 hour time frame, we start to look out for structure shift. Now, do we have any kind of structure shift here? Okay, now you can see that we have this high. This is a valid pullback. And if you look very well, you can see that it was a candle close. So this is a valid pullback, and it was a candle close. And then before that, you can see everything that happened here. This is the overall structure. Price didn't take out this high. It didn't take out this high. And also, we had a breakout structure here. So there was no reversal that happened there. So there was no way you can look out for entry there. And then we also have another breakout structure here. And this is the high that caused that breakout structure also. We start closing in on structure, right? And then right here, we have a low. And then what happened here? After this break of structure, price pushed all the way up and gave us another break of structure here again. This is a break of structure, another break of structure. Even though it's very small, it's still a valid break of structure because of this high. Okay, and then this one becomes the recent high. And then what happened? Price came back and took out that high, and then price returned back to that demand that caused that that shift. Middle point is the sweet spot. So you see how we're able to combine structure and all of that with COT reports to be able to find opportunity in the market. So that is what this video is all about. Combining how to read COT report. Now we can look at Euro futures as well. Let's look at Euro futures. This will bring us to the end of this COT report reading. Okay. So look at COT reports, COT legacy report. Let's look at Euro futures. What is happening on Euro futures? Are they increasing? Do they still want to still pushing Euro up, or are they looking at to short it? So look at what they are doing. Are they increasing their future positions on Euro USD or Euro futures? Are they reducing it? So for the months for the week that covered NFP, what are they doing? Of course, for what they are doing here is that they are increasing their long position. You can see that now we have the Euro FS 278. So they are increasing. They still want to keep pushing. They still want to keep pushing their position up. And then you can see this one also. They are short 115. So they are still pushing Euro USD up. Okay. Commercial, the same thing. Their long is very small and their short is their long is very small, 448, 449, and their short is 600. That is almost 50% of their long. It tells you something. So Euro USD, Euro may actually range because of these variations. This is almost 50%. So they're almost like equilibrium. That's why you're looking at total long is 708 and total short is 760. So short is higher than long. You see the variations now. So you're not looking at what is happening. So now you now ask yourself, has Euro futures traded into a key level? You start to look at that as well. Okay. Now let's look at this was the month of sorry, did I hope I'm actually looking at the actual data? Yeah. So let's look at the last week, which is actually the 3rd of June. What we are also doing? Now they are also increasing their long 202 and their short 120. So they still want to keep pushing price up. So it should tell you that you should be able to be aware of this information and know how to capitalize on this. Okay. While that of commercials, their long position is 437 and their short is 575. So the commercials, which is actually the central bank, which is actually the liquidity providers themselves, right? So they're actually increasing their short and reducing their long. So with this information, you can be able to know how to trade Euro USD. Good. So which other one can we look at? Let's look at S&P 500 and let's look at S&P 500, which is actually bring us to the end of this video. I'm looking at for indices. Let's go to indices: agriculture, petroleum products. Petroleum products, you're going to see something like US oil, crude oil, and rest of them. You look at all those ones there, and under natural gas also, we'll have natural gas as well. So let's look at, I'm looking at for cryptocurrency, legacy reports, COT reports. 1 minute there. I want to make sure that I'm looking at the whole thing together, okay? Cryptocurrency, metals, indices, S&P 500 stock index. Let's look at that. Let's look at that together, okay? So S&P 500 as of today, the data that covers last week, what are they doing? Are they increasing their long or are they decreasing their short? Now, for non-commercial, which is actually a smart money, they are decreasing their long 215, 375, and they are increasing their short 343, 340. The smart money themselves, the portfolio managers, the hedge fund managers. Why the liquidity providers themselves? The liquidity provider themselves, they are actually increasing their long. So 1.1,687,259 and then we have what 1,627,000. So their long is higher than their short. But if you combine both of this information, we see that long is 1,985,792 and short is 2,054,000. And if you can look at the graphical representation, you're going to see that we have more of what short and less of what long. Okay, so that was the month this week data. Now, the first week of the month of June, what we are there also doing? Let's look at that together as well. So let's look at that together. Okay. So with what I've shown you guys on DSY, you can as well go and replicate it for all these pairs. Look at it for the weekly, for the monthly. Is price writing from weekly key levels of rejection week, order block, fair value gap, and what is the COT saying? And do we have any kind of harmonic pattern in alignment with that key level? And then do we have a structure shift on the higher time frame for it to capitalize on the move? It's as simple as that. And then when price have established that move, you start to look at for all those 1 minute trade, 5 minutes trade, 15 minutes trade in the direction of the trend. If you enjoy trading lower time frame, okay? Good. So now for the first week in the month of June, what were they also doing? They were also reducing their short position and increasing their long position. So you can see their long is 250,353 and their short is 319,981. And then also the commercials, they were also increasing their long 1,571,442 and then 1,561,000, but the difference is not really that much. But then we can see that total long is one. We're looking at the total because that makes up the whole figure. Total long is 1,888,746, and then compared to the short, which is 1,948,000, we can see 37. So we're actually looking at to the whole total of everything. We have more short than long. So with this information, you can go to S&P 500 and look at, has price gotten to a weekly key level or monthly key level? Do we have any kind of rejection at that level? Do we have any kind of rejection at that level? Do we have any kind of harmonic pattern alignment with the key level at that particular point in time? So you look at this information and then you can be able to use it to make informed decisions to help you to better your trading. I know you have been able to gain value from this video right now. So what are you going to do with this information? Go back to your strategy. Look at how to combine COT reports with your strategy. And if you're interested to learn harmonic pattern, of course, the door is open to everybody. We have everything you need to succeed as a trader. The lectures and the videos and the course materials and weekly sections, weekly live sections, trades inside, mentorship. You have access to everybody and you have everything you need to succeed. So you can actually click the link below to sign up, or you can message us on WhatsApp to get access into our community. Okay, so these are the things you look at for when you want to start combining COT reports with your strategy. So this will bring us to the end of this video. And if you have actually gained value from this video, please consider subscribing to the channel, like the video and share the video so that other people can as well learn. And if you have watched from the beginning to the end of this session, it means that what I'm actually saying is interesting and is really making sense. And that also means that you have actually gained value from this video. Why not consider subscribing to the channel? It doesn't really take out anything from you. I will really appreciate it, and it will mean a lot to me. It gives me that fuel to be able to make good videos like this in the future. So thank you once again for joining me in this section, and I hope to see you again in my next video. And this will be all for now, guys, and I wish you guys all the best, and then bye for now.